So in today's video, I'd like to talk about maybe not the immediate term price action, because we do this often enough, um, but to take a step back and to look at what Palantir was initially was for us, the investors and the traders, and what it could become in the years to come. So I really started trading stocks in the pandemic era. And a lot of the reasoning back then was, one, there was no rational reasoning. It's just a question of if you're in or not. Or do you want to be part of the bandwagon on, let's say, the EV trend or the AI trend? AI trend wasn't a big thing back then, so I'm going to use the example of EV. And frankly, it really was a question of, as long as you buy EV stocks, you're made. Of course, you're made for like 6 months before the market tanked. And Palantir went public in this kind of mindset as well. And this is why I have a feeling that even for the years to come, Palantir will continue to be almost like a meme stock. A $293 billion meme stock in the hearts and minds of a lot of people who own it, right? Palantir, as a large cap company, is owned by a surprisingly high percentage of retail traders. Retail traders being you and me, people who would ape in without thinking too much about any consequences and just want to YOLO their money. So this is why I think that in the years to come, Palantir would need to keep coming up with different themes and give the impression to the market that it is ahead of the curve. So if we remember, initially, Palantir was not very big in AI. Of course, it was very big in data, and AI needs data. But the keywords to be with Palantir were never going to be like artificial intelligence. It was much more like public contracts, like data analytics, processing, that kind of stuff. And then ChatGPT came, and they kind of and then Palantir surfed on that demand. And my feeling is they would need to pull off similar stuff in years to come in order to keep the current level of interest, meaning about 100 million shares a day, meaning almost 300 billions for their data analytics. They would have to maintain their, maybe not ambiguous, but not far from that, their current reputation, which is, yes, you don't want to look too deep into what they actually do, but at the same time, as long as this golden goose keeps laying eggs, you're fine with it. This is in fact what a lot of people did with Tesla and Elon for many years. As long as money was pouring in, people were fine. And the day that the brand gets tarnished, people were not. And a lot of the things that they currently do may contribute to outcomes in the future. If we really think about what they're actually doing with the data, the public sector parties they're actually involved with, how long is it going to be before somebody is going to say, wait, hold on a second, is that what I'm invested into? Well, the good news is they're not thinking about this right now. The bad news is they're not thinking about it right now, but they might start poking around that topic, in the years to come. If we're more exposed to Palantir's price action volatilities, right? And Who's to say that there isn't a bubble that has formed around AI? Of course, if there's a bubble around AI, then maybe half of NASDAQ is going to go up in smokes, right? So we're assuming by buying Palantir that AI is not a bubble, that, this development direction is the right one. It may take some years, but our projections right now are on the right track. And here's the thing, I'm not saying that this has to be the reality. I'm saying that this has to be your assumption going in. Because if not, then there are other options in the stock market that will satisfy your investment needs. If you want to buy Pltr, the assumptions would need to be 1. There's no bubble. 2. The global economy or the overall structure of international trades and relationships will remain mostly the same in the years to come, like the next decade or so. And 3, AI is here to stay. It's not just going to be something that people come up with in a fever dream in order to protect themselves, right? This isn't going to be copium. This is going to be something real that'll become real in the next few decades. So going in, you would have to buy those ideas. You would have to take them and make them yours. And if you're actually comfortable with those concepts, if you're comfortable with those assumptions and assertions, unlike tech startup unicorns, Palantir is sensitive to major trends from real-world economic data releases, changes in key policies, and election outcomes can all influence Palantir's price action. The recent presidential elections turned out to be very good news for Palantir. Pltr, co-founder of Palantir, has always been a close supporter of the president. The company has been maintaining and developing its relationships within the public sector for a long time, especially in defense, healthcare, and customs, all of which are key aspects of the current administration. Despite having contacts on both sides of the aisle, it's obviously that ideologically speaking, Palantir is much more in sync with the current administration, which certainly helps for a company that has significant reliance and exposure in the public contracts. In terms of media coverage, most outlets tend to follow where the price action of Palantir currently goes, and most often try to explain the present instead of predicting the future. Some are, of course, suggesting caution given the recent gains accumulated so far despite a very high valuation. Many suggest that Palantir may be on the cusp of more catalysts and growth going forward, given the change in economic environments in the years to come, the interest rates decreases that are forecast, and the potential changes of the geopolitical events around the world. Articles themselves may not be worth analyzing one by one, but the overall tone set by the media landscape tends to be a forerunning sign that may be useful to us. The valuation of Palantir is fueled by the company's own performance, along with the surrounding environment, and investors' need to find a refuge in an uncertain environment. A lot of people have been looking to find a decent entry point to make a comeback in the equities market, and the last one to date was the Japanese liquidations. That was the last opportunity to buy Palantir at a heavily discounted price for those interested in its fundamentals. Given the composition of its shareholder base being more retail than institutional, Palantir has always been a stock of momentum and a lot of anticipation as well as self-fulfilling prophecy, instead of level-headed analysis on its actual numbers. We're not here to buy Palantir that already is, but to own the Palantir that people hope will become. Any rational analysis of its current financial results can justify the short-term price action and maintain the price action to a high baseline, but certainly not to push its current valuation to new peaks, or at least not to the extent people want to trade Palantir for in the first place. we can see that the market reacts far more significantly to the announcements of keeping or gaining new public contracts compared to any other announcements. And to a fault, Palantir remains heavily dependent on the public sector. Looking back, there are many regions that will support Palantir's price action, but they're very far from where the price actually is right now. The current consensus surrounding Palantir is that the market wants to keep pushing the current trend up, and that they're constantly looking for more clarity and catalysts from the rest of the potential shareholders before making the move. Since Palantir is still in the price discovery phase, a lot of people also believe that the world economy is in a funny position. After many years of shutdown, a massive correction may be overdue. It is a relatively conflicted state of mind from Palantir shareholders, and it's not difficult to see why once we zoom out and take a look, the price patterns of Palantir and other tech stocks could be a little bit hard to read. But from a longer-term perspective, Palantir has a pretty interesting price action pattern compared to many other tech stocks, and arguably a much brighter future as well. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, Gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought